Yo, what's going on, guys? This is your boy Trillionaire Mac, and welcome back to another video. So in this video, I'm going to be breaking down a EURUSD day trade, okay, that I took right here on Sunday. All right, now I've deleted the short position, okay, for now, because I'm going to break this down live with you guys. I'm going to show you guys my entry, show you guys what I was thinking for my stop loss, take profit, all the above. All right, we're going to go over higher time frame confluences, and then we're going to work our way down to the lower time frame, so you guys can understand exactly why I decided to take this trade and what my students and I were looking for to take place on Sunday when we were going over the charts this weekend. All right. So with that being said, if you are not a part of the YouTube family, I would love for you to be a part. Feel free to hit that subscribe button and hit that bell notification icon to be updated whenever I upload a new video, as well as feel free to leave a like on this video if you enjoy the trade breakdown. I mean, it's a banger trade by the time you guys look at it. By the time we complete the analysis, things like that. So with that being said, sit back, relax, and let's get into it. All right, so before we move on, I want to make a quick little shout out, okay? Now we are doing a 3-day masterclass, April 1st, 2nd, and 3rd, okay? So it's about 2 months out, a little less than 2 months out, okay? And during that masterclass, it's a 3-day masterclass, 3 parts. Every single day, we are going to be breaking down exactly how I day trade. Okay, so if you're someone and you want to know how we're able to catch these day trades on a daily basis, the masterclass may be for you. As well as if you're a student of mine and you want to focus strictly on day trading, then the masterclass is definitely going to be for you. Now, students of mine, you guys are going to get a discount, a nice discount on the masterclass. Everyone else, okay, not sure about the price just yet. Stay tuned for more information on that. But students of mine, you guys won't have to worry about the price. You guys are going to receive a discount where, I'm going to essentially just break down my day trading strategy, how I apply the information within the course onto the charts. All right, it'll be free for anybody to purchase. Okay, so you don't have to be a student in order to be a part of this 3-day masterclass. But like I said, more information is coming soon. Just wanted to throw that out there. All right, so let's go ahead and hop into the chart. So really, I started out on the H1 time frame within this area here. Okay, and as we can see, the H1 time frame traded into this level here, which I believe was an H4 supply zone. Perfect. All right, so we have H4 pivot supply here that price traded into. Once price tapped into this region, simply just went to the H1 time frame. Okay, and essentially I was just looking to see how price would react to this level. Now let's delete all of these markups really quickly because I really want to break this down live for you guys. So the first thing that I'm always going to do is look at structure. So we can see price pulling from down here. We have a high, we have a higher low, higher high, higher low, higher high, higher low, and higher high. Right after this higher high is formed, right, if we're going to continue market structure, we should have a higher low and then another higher high. Instead, right, we have a lower low and price found its new first lower high here. Right? So once we saw this take place, okay, essentially this was a break of structure to the upside, correct? Right? Because we see price creates a higher high right after creating the previous higher low. And then we have a change of momentum to the downside, right? Notifying us that sellers may come into the market. Now remember, once we have that change of character, change of momentum from uptrend to a downtrend, the first opportunity that you get to take a sell is not confirmed, okay? Remember what I say. It is not yet confirmed. The only thing that is confirmed is once price breaks that structure and creates a new piece of structure that is in the direction of the change of momentum, okay? So what do I mean by that? When price creates this new lower low and then this new lower high, yes, we do take an entry here for price to move to the downside, but price is not confirmed to being inside of a downtrend until we break this structure here. Price pulls back up like it's doing now, creates a new lower high, and then creates a new lower low. Then we understand that price is now in a confirmed downtrend, okay? That's just a little tip for you guys. I will be dropping a change of momentum educational video for you guys pretty soon here. But I just wanted to give that little tidbit. Stay tuned for that, right? So now that we have this as our sweep of liquidity to the upside that gave price enough momentum to change character to the downside, right? Now we're going to look to see how price interacts when it comes back into the supply that's responsible for taking out our previous demand. Now, this was my refinement here. Okay, I used this bullish candle here. Students of mine, you guys know why I used this bullish candle instead of the bearish candle next to it, which was an inside bar. All right, remember, inside bars simply mean that there is some type of range of supply or demand on the lower time frame. We discussed it within our supply and demand series, part 1, 2, 3, and 4. I think it's time to update that series, so stay tuned for that as well. If you're not subscribed to the channel, you may want to subscribe. So we have all of our higher time frame confluences in our favor. We have our higher time frame supply zone, right? Price trades into the supply zone. We have a sweep of liquidity. We have a change of momentum to the downside, where price looks like it is starting to create downtrend structure. Now we have supply that is responsible for taking out our demand, right? With our demand being here. Right? And this supply is what was responsible for that. So now what we're going to do is we're going to break this down to our correlating time frame to properly take our entry. All right, so I'll see you guys there. All right, perfect. So now we're on the M5 time frame. Okay, this is the time frame that I use to correlate my H1 trades. Okay, I use a certain equation to do so. You can actually get a little bit more specific for those of you who have the ability to have any type of minute time frame or second time frame or hour time frame, depending on your trading view package, right? But I'm going to just break this down to the M5 time frame because it's a lot easier for you guys to use the M5 time frame than, let's say, maybe the 7-minute time frame or the 3-minute time frame, things like that. All right. So on the M5 time frame, okay, we can see that this was our push to the downside, and now price is returning to our H1 supply that was responsible for taking out our H1 demand, which is here. All right. So we're going to just let this play out, and we're going to simply wait on our confluences to take place to tell us when it is time to actually hop into the market. Now, if you're having any type of issue or trouble with these concepts, feel free to join the mentorship program, right? I had a one-on-one session with a couple of students on yesterday. We have an update on a couple of students. We have 2 students that are 5% away from passing their FTMO challenge. We had another student that I had a session with that is 6% away from passing his FTMO challenge, as well as we had another student that just became a funded $100,000 trader. All right, and these testimonials all took place yesterday on my one-on-one sessions. I had 6 sessions with students, right? One-on-one sessions with my students, and then I had Tuesday night webinar as well with students. So if you're someone and you're having difficulty applying these concepts, or you don't necessarily have a trading plan, you don't know what to look for first, second, third, fourth, right? If you don't know how to flow with the market and go from the higher time frame to the lower time frame, if you need a simple trading plan that you can apply in order to produce the results that you want to produce within the market, I need you to get in contact with me, join the mentorship program, do whatever you have to do to get in contact with me, whether that be through Telegram, whether that be through Instagram, it doesn't even matter. All right, get in contact with me because I have something for you. All right, so we can start to look for our entry confluences now. So here we can see we have our sweep of liquidity to the upside. Price also taps into our zone. Now, we don't have 50% of this zone mitigated, but that's completely fine. Okay. What that means is price can essentially in the future come back to this area and possibly play around, but that's not something that we have to necessarily worry about now. Here we can see that price break structure to the downside. Okay, meaning we can see that we're within an uptrend all throughout this area here. Okay, we have a low right here. Okay, price breaks microstructure here. Okay, so if we were to go to the 1 minute or the 15-second time frame, we could see this a little better. But we have price taking out this piece of structure here, creating this higher high, excuse me, higher low, higher high, higher low, tested high, higher low, higher high, higher low, and higher high. Right? Then right after that, price then breaks to the downside and creates a lower low. So now what we're going to be looking for is we're going to be looking for this valid supply zone here to be interacted with price. Okay, the reason why we're going to be looking for this supply is because This supply here was responsible for taking out whatever demand is resting here. We can see that price trades into this area, right? We have a failed reaction, meaning price interacts with demand, tries to push to the upside to create a successful reaction with taking out this high, does not create a successful reaction, instead fails, pushes to the downside, pushes back to the upside here, and then continues to push to the downside. For those of you who understand what inducement is, okay, we can also see that we have this inducement here, okay, simply just liquidity resting above this high that may attract price to actually tap into our zone. All right, so let's continue to play price out. All right. Also, if you want to take advantage of my higher time frame trades, feel free to join the Telegram community as well. All right. Just make sure you guys don't send those trades out because you will get kicked. All right, for sure. We have a bot in there that will kick you out, put you on a blacklist if you decide to forward trades. So don't do that. All right, I believe I raised 5.5 pips on this trade here. There we go. All right, so we got tapped into the market here, okay, when price pushed to the upside on February 4th. And the rest is history. Okay, our stop loss is going to be right above this zone here. And then we simply just allow price to do what price does best, which is move. All right. So we can see here, we came very, very close to hitting our stop loss. Okay. Let's pop this up, make sure it's right above here. So 5.8, so we're gonna move this up just a little bit. There we go, perfect. Right, now, once you actually take your entry, okay, there's no need to be on your entry time frame. So we're gonna bump this up to the M15, okay, and we're gonna talk about targets. Okay, what are we looking to target? So if price has created a strong high here, meaning this high was responsible for taking out this low here, okay, then what you're going to do is you're going to target whatever is weak. For those of you who have not checked out my weak highs, weak lows, strong highs, and strong lows video, I would encourage you to do so because I really break things down within that video. But if we know that this is strong here, then that means that this low here has to be weak because this low can only be strong if we're able to take out this high here. You can see price pushes to the upside and then gives us an entry schematic for price to start moving to the downside after giving us all of our confluences based on the higher time frame and the lower time frame. Therefore, there's no reason, now that we have an entry schematic, there's no reason for price to actually continue to push to the upside to take out this high. It definitely could, okay, but we have to trade based on what we see, not what we speculate. Therefore, this is going to be, if I'm trading with the trend, this weak low is going to be my target. So let's go ahead and set this low here. Perfect. Let's actually go down to the M1 time frame really quickly. Okay, that's what it is. This was actually taken on the M1 time frame. I was wondering why my stop loss was off. It's like 5.5 pips. All right, let's fix this up just a little bit. Perfect. Okay, yeah, 2.5 is more like it for this case. I don't think I took this on the M5 time frame. See, this is what happens when you erase your trades. It was 14% return, 3.5. There we go. So still took the trade on the M5 time frame. I just refined a little differently. In this case here, refined to this bearish candle instead of this entire bullish candle here. All right, supply and demand concepts within the course. Feel free to check it out if you're questioning why. That is the refinement. All right, so let's go back to the M15 time frame and let's talk about targets. Okay, 14.06. That's more like it because that's what I collected on this trade here. So we can see that we're targeting this weak low. Okay, essentially this low was weak because it was not responsible for taking out any type of significant structure, which would be located here. All right, there we go. At that point, we're just going to play price out. We can see it plays around just a little bit and eventually decides to hit our target. Here. All right, so that is the reason why I decide to hold my trades, okay? Now, if you're not gonna hold the entire position, feel free to just hold a piece of your trade. and you'll see how many times your trade actually targets those higher time frame targets and things like that, right? So this case here, 14.06%, I believe I collected around 14% when you subtract commission and things like that. But this was not a bad trade whatsoever, right? And this was like clockwork. For those students who had a 1 hour one-on-one session with me this past weekend, right, this was also given to you guys as a little tip. Anytime I have sessions with students, if there is a trade that I'm waiting on, I'm always going to freely give it because I want you guys to take advantage of these setups right along with me. While you are still learning, while you are still understanding what to do within the market, there's no reason why you cannot be successful. There's no reason why you can't pass an FTMO challenge. There's no reason why you cannot make money while you are learning how I make money. All right. So with that being said, really quick breakdown, 14.06%, 3.5 pips as the stop loss. If you guys have any questions, feel free to drop them in the comments down below. Very, very simple trade, just simply taking advantage of what the market gives us. With that being said, I'll catch you guys on the next trade. Peace out.